So walk me through tax strategies. Where do people get taxes wrong from a mindset perspective? And then let's get into some strategies that you help your high net worth clients get that maybe people haven't heard about before.
Yeah, I think tax mindset is like the tax code was written for business owners and real estate investors. Like there's 7,000 pages in the Internal Revenue Code, and only 12 of them tell you what to pay in taxes.
Mm-hmm.
The other 6,980 tell you how to get out of them through being a business owner or real estate investor.
Literally.
So you are entitled to these tax benefits.
Mm-hmm. So what are some strategies that you see people do that are like you guys do for your clients that you've seen work the best? What maybe give like some entry level 101 strategies and then going up to some crazy, maybe unique ones that we haven't heard of? Because I think a lot of us have heard like doing the 1031 exchange or like a cost segregation or accelerated bonus depreciation. Maybe we can still hit on those for people that are brand new and maybe aren't familiar with the terms too.
So you want them for real estate investors?
Let's start with real estate first, and then I'm really curious about advice for people because I sold my portfolio, so I'm just eating my taxes right now.
Yeah.
So I need help too. So first we'll help the investors.
Yeah, so typical ones like you mentioned, 1031 exchanges, right? You can not pay anything in tax on any time you sell an investment property. You can do that forever until you die. And I think this one's really crucial because people do 1031s throughout their life. And then all of us have probably heard of a friend's parents, because it's not my parents and probably not your parents, that are going to, retire with a bunch of properties. But maybe our friend's parents who are now 70, 75, they're getting too old and they're like, I don't want to deal with this real estate portfolio anymore. So I'm going to sell it or I'm going to give it to my kids. Like never, ever let your parents give you a rental property before they die.
Because now you don't have the stepped up basis and now you're going to pay the estate tax.
Exactly. So that triggers a taxable event when they gift it to you. And like you're saying, the property could be worth millions of dollars more than what they purchased it for. And you wouldn't get that unless you get it when they pass. So let's say they bought it for $100,000 and then when they pass away, it's worth $1 million. Well, you would get it for $1 million the day they passed, and you could sell it that day for absolutely no tax. So that one's really important. I really like, a lot of people talk about 1031s, but I call it like the reverse 1031 or the slow man's 1031 or slow woman's 1031, where like it's not even through a 1031 transaction. It's outside of it, but it's in the same year.
Okay.
So, for example, you mentioned you sold your portfolio.
Mm-hmm.
Maybe it was in 25, I hope. And so we have the rest of 2025 to figure out how we're going to lower your taxes. And it's not always real estate that will do that. But let's say we have from now till the end of 25 to find you another real estate portfolio that maybe takes less time from you, makes you more money. But the perk of it is now you bought a new portfolio, you can redepreciate everything. So then you just recost seg that new portfolio and offset your taxes. One that I think you'd really like because you like to buy businesses too.
Go on.
This is called the self-rental election. And I don't mean like the Augusta rule, but the self-rental election means, I'll use this as an example. We're in my podcast studio right now in one of the offices that I own. If you own an office or building or warehouse or whatever, in the same percentage that you own the business that it's housing. So let's say, for example, if I owned your tax coach 100%, I would have to own this building 100%. But for tax purposes, as long as you make this election, the IRS says it's one unit. So the cost seg on this property, which gave me like a $300,000 loss, offset my YTC, my Your Tax Coach income by $300,000. I did not have to be a real estate professional.
Okay, what the hell? Wait, what? All right, walk me back.
Yeah.
So
let's say you own a HVAC company.
Okay.
25%. So you own it a quarter. You have 3 other partners.
Got it.
You guys could buy an office or a building Or my favorite's commercial residential like this in places that I like to visit. So Scottsdale is one of them, Miami, New York, California. You can do it all over. Find somewhere you like to travel to and buy a commercial residential. So when you're in those cool places, you can also stay. So like upstairs from here, I can stay as long as I'm here for business, which I am because we're recording a podcast. Okay.
Stock minute.
So you and your 3 partners of the HVAC company go in the same percentage on a building or a place like this. And now you can make the self-rental election where it's all now one. So say $1 million condo in Miami, you do a cost seg on it, it gives you $400,000 of depreciation. That $400K will offset your business income by $400K.
Damn. Okay.
And then just keep doing it.
I just keep buying new offices.
Yeah. In places where you can do business. So for you, you have members all over the US, probably all over the world, but you know, find hubs where there's a lot of your people, probably Dallas.
Yeah.
Denver, Seattle,
Atlanta, probably like Tennessee, Florida, and here.
Yeah. So let's say this year you're like, okay, I want it in Scottsdale and Miami. So just own it the same percentage. Maybe it's Action Academy that you want it. So if it's 100% you, then buy the building at 100%. Or if it's 90-10, the other person will have to come in. That's the only downside, is it has to be the same percentage.
What if it's phantom equity?
Well, if it's not on paper.
It's not on paper, so it's phantom. So it'd be just me having 100%.
It has to match your tax returns.
Okay, cool. So it has to be me 100%. Got it. So when you say commercial residential, did you own this unit? Do you own like the entire building? Like, how does that work?
So for this building in particular, I own this unit.
Okay.
But it's commercial residential, meaning it's zoned for both. I could live here or work here or both.
Okay. How does that work? I actually have not heard of that for some reason.
Commercial residential, there's a lot of them. And now that I say it, you'll probably notice. So an example would be go to Old Town Scottsdale.
Okay.
All the businesses are downstairs and there's always a unit upstairs. That's commercial residential.
Okay. Yeah, that makes sense. I see that a lot in Europe, but I don't feel like I've ever heard anybody talk about that.
You're welcome.
So there we go.
That's just one of like thousands of strategies I have up my sleeve.